And we are live. Hi, in this video, I will be going over what a business line of credit is, everything you need to know about it, how it all works, qualifications, how much you can get approved for realistically, and so much more. So please stick with me until the end of this video because you're going to get all the juicy details and all the helpful advice you need on what type of actual funding is best for you. And if you're watching this later on the YouTube channel, great. I'm streaming right now on the TikTok. I know some of you guys are like, whoa, TikTok. Well, I'm not a huge fan of it either, but it's a great way for me to impact my audience, let alone be on video. So for those of you just joining me, welcome in. Good to see you. Take a seat, grab a cool beverage. I will be talking about Business Line of Credit 101. Is it worth it for you to get? Does it make sense? Do you need to only withdraw whenever you need, or would it make sense to have a lump sum? Where can you go and get one? And a few bits more. Jimmy, how are you doing? Let me know in the comment section where are you guys tuning in from. If you guys have any questions, comments, or concerns, please leave them for me. I'll try to answer them as I go along. This one, I think it'll be more towards the end because I want to get through some of this content. And if you're questioning why I sound like Squidward or I probably sound like Tony Robbins, I'm kidding, not even Tony Robbins, but I have a congested nose, a small cough, I have a sore throat a bit. So I'm going to push past through it and help you guys out, but I'm going to try to keep it as short because I want to keep my energy. Now, what is a business line of credit, right? Now that you guys are watching this here, I'm actually on my desk. I'm streaming this through the phone. If you didn't know that yet, probably it's very obvious. But let me see, move this over. Just kind of got dark here. Yeah, see, it got kind of dark. See, I have the blinds, but not really much coming through. There we go, just a little bit. It's not too much of a difference, it's just something small. But with a business line of credit, what that is, it's basically where, let's say you, instead of getting a lump sum, this is one of the best ways to put it, you want a business loan or a cash advance, depending on the state, they call it a cash advance or business loans. Instead of getting a lump sum, let's say you wanted $50,000, but you didn't want to use up all the $50,000 in one shot. You have it for multiple purposes. Maybe it's inventory, marketing, advertising, payroll, a whole bunch of different uses, equipment. The list can go on and on. I can be here for hours. But you're like, well, I don't want to use up all this $50,000. I probably only got approved for $50,000, or maybe you got approved for more. Maybe you got approved for like $80K. But you're thinking, I only want to use $50,000 right now, but I don't want to use up the full $80K. So what you can do is withdraw. Like, let's say I get approved for $80K, so I'm going to take out $50K. Say, oh, I only need to use $50K right now. I don't need to use it all up. And that may be because of a seasonal change. Cash flow is usually it's like the biggest reason why people do business lines of credit. Because, like I spoke to so many people today, and I have in the past, and I will continue to do in the future. Like today, one specific individual in the restaurant industry, it wasn't really realistic, and I'm going to send them an email here soon, but asking for, going into a lump sum situation, you want to have a lower, they're like concerned about the daily payment, and they talk to me about why that's the reason, and because they're, they see some fluctuations, and they're on a high projection with increase in revenue and then per annual gross, but they've been hit sometimes, and the way they got to pay people on a weekly basis and even on a monthly basis, it doesn't allow for them to have sufficient cash flow throughout the week and on a daily basis. So it can vary. And so I was looking at this individual, and I was breaking down some numbers for him. If what we could do to get you at a payment that you felt most comfortable, if you wanted, let's say 110, and I will be emailing you here soon if you're watching. Just to say, at 110 per day, I know you don't want a per day payment, and it's always hard to get somebody into a weekly if it doesn't make sense. You've never paid anything back, or it just won't work. you have to work your way in to get a weekly payment, and you have to have usually higher revenue and higher funding details in certain, like a cash advance for the most part. But at 110, what we're asking for is to decrease the rate. I can't even decrease the rate any lower and keep it at 8 months. So that means I'd have to increase the 8 months to about 12 months. And that still wouldn't even get you to 110. And that's not being realistic at all. At $110 payment per day, that won't work at all. And see, these are the things that I do a lot of the time. And so I'm like, well, we have to come up at least 130, 140, 100, if not 180, because for what you're specifically needing this for and your funding criteria, it says everything here in your history, your remaining bank balance, the debt to income ratio, utilization, NSFs, possibly negative days, usually wouldn't qualify you at all, especially within the last 3 months. So we look at all this and I say, well, yeah, that's not realistic. So if you're hurting already in cash flow, and it's not only for cash flow, you're like, well, I don't want to use it up all at once. Can I get to use the money whenever I need to? I might not need it now, but I'll need it in like 4 months. Then get a business line of credit. That's what would work best. And what these do is they're revolving. So let's say you did get approved for 80K, you take 50K out. So with that 50K, you only pay on the principal, right? And on the interest. So the interest can vary. I can't tell you exactly what it'll be. I don't know your funding details. And it'll vary depending on lenders. Sometimes they might not give you any kind of a withdrawal fee attached to these. It might just be like a set per month payment. It might be just like a $20 per month payment. And then in other cases, you do get withdrawal fees. We'll say, it could be 0 to 3%, 3% even more of those draw fees. Again, it depends on the lender and what they're willing to give you. But let's say you have 50,000 you take out, or let's make it a little bit easier because I used this example earlier. You take out 10,000 of that 80,000 you get approved for, and you pay it with extra added interest. Maybe that adds on an extra 2,000 or 3,000. So your overall payment back is 13,000. And then that 13,000, it's usually the type of payment we make with a business line of credit. It can vary. It can be 6, 9, 12 months usually is what you see. Sometimes you see a little bit more, but not always the case. It's hardly ever going to be that way. So these are shorter than what you would expect in time frame with the lump sum. So if you get a lump sum, it's a shorter term, you can think about 4 to 6 months. You could think about 4 to 24 months, but it pushes you over that year. So if you feel like you're going to need, and most people don't think they think they need more than a year. They think they need more than 12 months. It's not always the case, and it's not always what you're going to get offered. I've had people here who are like just new to all this, and they're not getting offered what they thought they would get, and it's all based on everything: revenue, details, cash flow, goes on and on. So you just have to be very aware of that. And so with the business line of credit, you get like the option of 6 to 9, 12 months, depending on what we can get you. Usually people, and I would do this too, is try to go for a longer one. So I'd do the 12 months. And then, so with that example, at the 13,000, that's the extra 3,000 that we put on the 10,000 on interest. And it depends, again, interest rates depend on your funding criteria, NSFs, revenue, FICO, time in business, industry type, and a lot more. And so if it's an extra 3,000 in added interest, so 13,000 is what we're expecting there in overall. And we would take that 13,000 and divide it by the 52 weeks, and that would give us our weekly payment. So you can pay that. Let's say, for example, it's a $280 payment per week. You could pay $280 up to those 52 weeks for those 12 months, and then you're done with it. Or you can say, look, I paid $280 these first 3 weeks, but I don't want to pay the rest of it throughout the 52 weeks that I get, or throughout the 12 months. So I'm going to pay it all off. So you decide in the third week, I'm going to pay off $9,700 or however much remaining of that principal is, right? And so you save up on interest over the long run. So you got to think about it like that. And no prepayment penalties in most cases. It offers a lot of flexibility. As I said, you can make the payment on that 10,000, and it's a revolving line of credit, meaning it replenishes into the original 80K. So it's not like you take out 10 from the 80, it becomes 70. Once you pay off the 10K, it becomes the full 80K again. And so most people have that wrong understanding. Like, they think about it as a lump sum, where you have like 10K you're given, you expect to pay back like 14 to 15,000. It might seem a little pricey for you, and you're set in these kind of like daily, and there's also the monthly payments if you're doing a longer term, and if that makes sense with monthly payments, right? So it all depends. The interest rates can vary. Again, it can go as low as like 3%. It can go as high as 18%, 4% to 51%. I know there's online banks, and then there are traditional banks where you go to a brick and mortar online banks. You have alternative private lenders who might have higher interest rates. And then there's always, like I said, there's that withdrawal fee. So anytime you take out more, let's say you paid off the full 10,000, you're like, well, next time I want 30,000. That's available for you because you were given an 80,000 limit. And so out of that 30,000 now, you're gonna have a set interest, and you're gonna pay that, right? So 30,000 plus the interest rate, and there's always a principal. There's always the interest rate. There's always a balance that comes into all this. So I have my notes here. I'm actually gonna go through it. But if you guys would like to learn more about business lines of credit, I'm gonna release a new video here tomorrow on a program. But yeah, just be aware on the channel, guys. I'm gonna be releasing a very nice program tomorrow. But you are looking at interest, and then that's the balance fee times the balance that you have. So if it's a 10,000 at 1%, and that's keeping it low, that's $100 per month in interest over those 50, the full 12 months. But again, if you don't want to wait that full year to make the whole 10,000, you pay it off early if you would like. But there's a set amount, and there's some calculations to this. And the amount you can get up to, it depends on the program, but you can expect to get sometimes with like online banking. I know like Blue Mind and them, they set up a 40 to 60% of your average monthly sales within the last 3 months. We want to at least look at 10,000. If you don't have that, it wouldn't be worth applying. And then some other companies may have a higher revenue requirement. Maybe it's 20, maybe it's 30, maybe it's less, but they will give you more in terms of the amount you can get approved for. So as opposed to getting 40 to 60%, you'd be getting from, varies again, but it'd be like 150 to 200%. So not without doing the numbers here, we can all look at that and say what it'll be. But I won't get into it in this one. So that's stuff that I can communicate with you. And just so you know, business lines of credit can be revolving. You can use them however you choose. It offers you the flexibility to use these funds, again, when you're having insufficient cash flow, or even if you're not. And there's a period of time you feel like you're not going to need the funding, but you want to have it ready for the amount you will use for something. Like, let's say you got approved for 80K again, and in 2 months, you're not using it in 2 months. And so then you come back to it and you're like, well, I only need that 50,000 now because I need to purchase some equipment. Then you can put that 50,000. And then again, there's always a withdrawal fee. So I can't say exactly the percentage, but it'll depend on each company. It can be 1 to 4 to 5% or so. These types of draw fees can increase, and they may add up over time, right? You continue to withdraw those withdrawal fees that may have been $100, a few $100, maybe it's in the thousands plus. It probably adds on a little bit more, right? So it's something to think about. And you can always add a business line of credit to an existing merchant cash advance or some type of a business loan. That option is always on the table for you. They don't work the same. They're not in conjunction. Like an MCA has you. If we looked at solely an MCA position, we'd say, well, you already have one over here. How much of it have you paid off? Does it even make sense to help you get another one? How much can we give you? Or can you be approved? So we see that and we go, okay, well, he already has a first position. We'll come in with the second position, but only give you a lesser amount than what you got initially approved over here for. And then we don't, like when you come in with the business line of credit, we don't look at the two. Like the positioning in the line of credit is different than the positioning here with the MCA. So you might have different offers with lines of credit, but that's separate from the MCA. And so that's pretty much the gist of it. Without getting too specific, because every program can be different for what you can get approved for. But the key points I made in this, if you're just tuning in, we're talking business line of credit 101. And the main points is instead of getting a lump sum, you get whenever you need to use those funds, you can withdraw from the account. You get approved for 80K, I only want 10K. okay, what is that 10K plus the added interest that's on top of it? And it depends again on the service. It can be as little as 3, maybe less than 3, 3% to 18%, 4% to 51%, depending on the service. So you add on that interest to that 10K, and then what you do to determine how much you would end up paying in weekly payments is, if it's a 12-month, it's a 6-month, you divide it by those number of weeks, the amount, principal plus interest divided by the number of weeks that make up all those months. And then that will calculate your weekly payment. And then if you want to pay it off all at once, or you want to pay, let's say you had a $280 payment per week, you're like, well, I don't want to continue paying $280 every single week. I'm not even using it. And you just say, okay, well, I end up having to pay back $10,300, right, because of the principal and the interest, right? We have $10,000 and then another $3,000 added because of the interest, so $10,300. And then that's what's going to be that you have to pay back within those, if it's a year, 52 or so weeks. And then again, if you don't want to pay that $280 every single week, you could decide, oh, I'm going to pay the rest of it off. I'm going to pay the $9,700 off. Boom, out of my account. And a lot of these are used for kind of quote unquote bridge loans. So if you have something you want to do really quickly, you're going to pay it off as fast as possible. That's what a lot of people end up doing, is they get a business line of credit. Usually, if you're in it for the long term, like I said, again, we can give you 0% withdrawals, but we give you like a $20 per month or so payment fee, or like these payments. And then that's addressed because you're doing it long term, and it makes sense to have that. And again, it can add up, but unlike the withdrawal fees, that may be a little bit more because you're usually using it faster. That's the difference. So instead of getting a lump sum, it depends like where you are. Excuse me. So if you needed a lump sum, then it would make sense. Right? Maybe you get approved for more with the working capital loan for your expansion project. You wouldn't get as much as you wanted to with the line of credit, as you probably were approved over here for the working capital. But the difference can come down to what is the total payback, the interest rate, the factor rate, etc., APRs. What is my daily payment looking like? What is my weekly, bi-weekly? What is the monthly payment like? What are my terms? How long am I expecting to pay this back? What does that all look like? What is the actual payment type of this program? What do they require me I do? So those are all things that I can look at in all these different scenarios, but I won't know again until you guys fill out a business funding form, and that is in the bio. Link, click, 1 or 2 down, click webpage, and then business funding form, fill it out with some simple details, and I'll get a hold of you and I'll show you all these options. But that's pretty much the gist of this video. If you guys are just tuning in, business lines of credit, they have their place. I'm not gonna say they're always the best, but it's just a good thing to have. If you get a lump sum and you want to add a line of credit to it, we can do it. But it's all up to you and the purpose you guys want to use it for. Let me see who's tuning in now. James, I'm gonna see if there are any questions. If there are none, then I will close down for the evening. Excuse me. Like I said, I have a runny nose and a cough. But let's see. What do you guys need help with, if anything? Let me know. I know sometimes we don't get people who comment, and that's okay. It's not going to happen every time. We're just actively listening. And then I'm over here just hanging out on the computer. And if you guys do need help getting a line of credit or anything else, you want to know what your options are legitimately without going through these online marketplaces that are a little bit more difficult, because it does disappoint me, because you go and apply for one and they don't give you the full picture, right? They don't tell you, okay, this is what you would expect to pay back. They don't give you scenarios, right? They just tell you this is the qualification. They probably show you a little bit about how it works, but not exactly. You have to find that information somewhere. It doesn't really apply to you or your industry because they don't know all that yet until you go through the application, like everybody tells you. And probably you're tired of having to get these phone calls from people trying to heckle you. I had a guy today, he just said, I've had it. He's like, I've had people just trying to call me every single day, every single month, every week, and it's getting me fed up, and I'm sick and tired of it. But that's That's what I want you to avoid. I want you guys to be careful because those people really don't have your best interest at heart. They will sound like it, maybe they'll come off that way, but you have to ask the hard questions. And even if you don't ask the question, the most telling sign of these people, it's that they don't break it down for you. Like, they don't get to know you as a person like I do. They don't get to understand your struggles. They don't get to understand your ambitions, your goals outside of business and in business, both. And that gives me a better sense of appreciation. And that allows me to open up more to you, which is a hard thing for me to do sometimes as an introvert. But if you let me in, I'm going to let you in for sure. And I'm going to break it down for you. I'm not going to give you guys any of that BS. I'm going to cut through everything and show you guys, like, here are your options. Okay, if you don't have any options, what's your best one? Or here are your options, but what is your best one? And then I'm going to break it down in numbers. And usually most people fuss because it's, if they only qualified for like a daily or a weekly, so be it. And I'll explain it in the email why that's the case. And if this doesn't make sense to get that lump sum, then maybe a business line of credit. But don't think because that's on the table, you should be getting also a term loan. No, just because you get a term loan and you want monthly payments, that's not how this works. You couldn't get an SBA loan. I mean, they wouldn't even approve you. Or a PPP, maybe you do have one. You did get one. Didn't get another draw. And then you can't apply to these employee retention credits. You can't do it with the grants that are so tiring to find out which one's the next one. And I don't necessarily not like that. It's just, it's too much of a process. So that will conclude everything in this video. I do appreciate your guys' time. I do have to get going again. I haven't been feeling my best. It's noted in the fact that I haven't released anything much here today on the channel with TikTok. But keep looking out for videos on YouTube, as I have already previously made them, and they will be uploaded. Another one here, I think tomorrow I'll be uploading the one on the business line of credit opportunity to take a good look at, and where you can go from there. All right, thank you. Bye.